Welcome back to Yuri's Box. In this video I'm going to talk about TLT, the week ahead. If you like this kind of content, consider leaving a like and subscribing to the channel. And as usual, nothing in this video is financial advice. So, as I've hinted in my previous videos, the next 2 weeks, just to stay focused on next week, the next week is potentially a big week. We have a few spicy things coming up. The main dish, if that's how you want to call it, will be coming on Wednesday afternoon, if you're in Europe, as I am, with the PMI reports. So why are the PMI reports important? Well, because they offer a screenshot of business sentiment and really how a business is orienting themselves in this current environment. And if you recall, really, when I spoke about the February PMI, that was kind of the first indication, and this was well before any tariff drama, that we were potentially moving back to an economic environment that was potentially more similar to what we saw in the summer months. So in July, August, where you saw potential growth concerns and disinflation. In fact, if you recall, we had an inflation report for the month of June, which really kind of sparked the first. It was really the starting point of the growth concerns that followed after that, because that report was disinflationary, but potentially too disinflationary, meaning that it hinted at the fact that the economy was potentially cooling a lot more than people thought. And eventually that is what we saw during the summer months. But after that, we actually saw, things pick up again. A lot of people hinted at the fact that potentially things weren't that bad and it was just a one-off. I've argued in my previous videos that what we saw right here was potentially mostly due to transitory events, again, using the T word, I know. But again, during this time, we had right here in September port strikes, or at least the possibility of port strikes. Right here, we had natural disasters. Right here, tariff front running began and actually lasted until arguably January to February or even March. And in January, we had more natural disasters. And again, throughout this period, you also have the holiday season, which, as 2023 shows, it usually makes inflation a bit more sticky, because that's when people travel more, they spend more, they get their bonuses at the end of the year, and everyone's just upbeat. So people spend more, and that will potentially make inflation look a little bit worse. And again, what we saw from here was potentially a series of transitory events that made the economy growth prospects look better than they actually were, and probably inflation look a little bit worse than it actually was. And in fact, I was making videos from mistaken right here at the peak, and I was saying that my expectation was that I was expecting to see inflation to roll over, just as we saw last year when inflation peaked out at 3.5%. And it just, followed the previous trend, just lower inflation. And again, I think that the PMIs, if they continue to say the exact same things that we saw in February, and that we actually continue to see in the following reports, the prints, the headlines, the numbers that you see, the index, 50 point whatever, in March they came in a little bit better. But if you actually read the report, it is still consistent with what came out in February. So as far as the week ahead is concerned for TLT and bonds, I would pay attention mainly to the PMI reports to see, first off, if we're seeing more of the same. Second of all, I'm very curious to see the employment side of the equation because, again, I'm curious to see how things are holding up on the employment, and depending on how on what the report is indicating, you can kind of make an idea, come up with a rough forecast for what will be the non-farm payroll report. We actually do get, as far as the non-farm payroll report is concerned, another round of initial jobless claims. The way I treat initial jobless claims is that the range between 215 and 220 is kind of the line in the sand, meaning anything below 215, and you can generally expect a lower unemployment rate in the following report. Anything above 220, you can expect the unemployment rate to move up. Again, and this isn't discounting also any potential moves in the labor force participation rate, which, again, as I've said in previous videos, can definitely artificially, quote unquote, move the unemployment rate up or down depending on how the labor force participation rate is printing. Currently, the last read was 215, and we're still missing a few numbers for initial jobless claims. Again, the way I'm going about initial jobless claims is that just looking at what happened last year, for example, 2024, in January of 2024, initial jobless claims bottomed, and they slowly, went on grinding higher, slowly, as we move towards the summer. This is basically what I'm expecting this year. We bottom in January, and I'm expecting initial jobless claims to slowly drift higher towards the summer. Again, this will also be affected by how the economy is moving. Things like credit spreads, for example. We've seen a blowout. Usually, when you see credit spreads, that isn't good news for things like small caps, which again is basically the majority of the U.S. economy, meaning small companies. And if they're suffering, potentially you could expect, bad news on the employment side. But again, generally speaking, I'm not expecting to see things evolve, from, in a fast manner. I'm expecting this to be a process, and I'm expecting this to play out in many months. It's gonna be grueling, given the fact that, each week that goes by feels like a month, and it's not ideal, but it is what it is. So again, going back to next week, we have PMI reports, another round of initial jobless claims, and we have some consumer surveys, on the Michigan University. Again, I'm not the biggest fan of these surveys on the consumer side, because again, whenever you ask a consumer, and again, we're all guilty of this, it's not just the other guy. It's just that whenever you ask someone their opinion, that can easily be skewed by political leaning. All right, and this is especially true for inflation expectations. Well, it is true that as of late, we have seen a Republican and independent inflation expectations move up. A lot of it is driven by Democrats, what they're expecting. And again, this isn't me, judging Democrats, Republicans, and independents. I'm just pointing out the fact that before Trump got elected, Democrats were, having a ball of a time. No worries in sight. Trump gets elected, they're expecting Weimar Germany. Republicans, when the Democrats were in power, they're expecting Armageddon. Trump gets elected, and Republicans are now expecting, the merry land of Oz. So I take them with a grain of salt. However, I'll do my best to cover them. And finally, this is really most of what I think is worthwhile, to expect, and really what to pay attention to. Going back to TLT, after making a mockery and after making many ironic comments on the squigglies and not how you shouldn't pay much attention to the technicals and the charts, sure enough, we actually did get the flush to the trend line we broke out of in February, and we actually backtested it with the sell-off that we saw 2 weeks ago at this point. So we got a backtest of the trend line. It will mainly all depend on the fact that whether or not this candle right here was due to the liquidation in the system and stress in the system. Because if that is the case, as possibly last week's kind of stabilization could lead us to believe, I do believe that this could make the case for a weird kind of action between the dollar and bonds. And again, I'm not expecting this for next week. This is kind of more long term, where you see the dollar strengthen. All right, dollar strength accompanied by lower yields, meaning TLT going up. And that is actually something quite weird, which doesn't happen outside of extraordinary times. This is something that you've seen, for example, going on the on the 30-year yield. You've seen this during 2008, where you see, for example, the current correlation, where you see higher yields on the 30-year bond accompanied by lower dollar. But usually what follows after that is actually higher dollar and lower yields. All right. Going back, let's see if I'm doing this on the fly right now. I really don't remember where the best example is, but again, if I'm not mistaken, it was straight after Lehman Brothers. So from the 10th of November, right here, and you actually saw dollar up overall and bond yields down. All right. I think that eventually we could get that. I'm not expecting it to play out straight away, so I'm really not calling a bottom on the dollar, and I'm not necessarily calling for a huge rally on TLT just yet. I think that will be a story for the non-farm payroll report potentially. But again, if we do see the PMI reports print, come in negative, let me see if we actually have actually we do have a services forecast for about 52.9, which is slightly below the print for the month of March. Again, if we do see weakness in the PMIs, I would expect that to be a tailwind for TLT. Again, that not considering really not further liquidations notwithstanding. Again, so really next week the main event is the PMI reports, as well as another round of initial jobless claims. But again, the only reason why initial jobless claims are worthwhile, worth considering, is just so that you can come up with a personal forecast for where the unemployment rate could potentially be. If you're looking at initial jobless claims as an indication of are we not in recession? Are we not in recession? I think that is the wrong way of going about the initial jobless claims, because usually layoffs are the last thing to fall. All right. If you look, for example, again, at something, my favorite 2008 comparison, you actually saw layoffs peak at the end of the recession. So if you're waiting for layoffs and initial jobless claims to really, blow out in order to say, oh man, we should cut, or, the economy's not doing so hot, I've often made the analogy of, just saying, oh, I'm not going to shower until I smell like rotten eggs. If you're waiting that long, you're going to be late. I mean, if you're waiting for initial jobless claims to break out significantly, chances are what could have happened has already happened, and you're going to have to play catch up at that point. So yes, pay attention to initial jobless claims, but overall, I'm not expecting anything too dramatic just yet. So again, I'll leave it at that. TLT is successfully backtested the trend line, and it actually has some confluence here, because we actually backtested the trend line. We also backtested again potentially the lower bound of the parallel channel that we have here. So is it a bottom for TLT? Let's see how things evolve. Let's see how the PMIs print, and reassess then. If you like this kind of content, consider leaving a like, and again, subscribing to the channel. And I'll see you next time. Bye.